Okay, let's take up chapter 3. Okay, let's begin with the learning objectives. Number 1, describe the tactical decision-making model. Define the concept of relevant costs and revenues. Explain how the activity resource usage model is used in assessing relevancy, and apply the tactical decision-making concepts in a variety of business situations. Choosing among alternatives with an immediate or limited end in view and objective is to use idle productive capacity to increase short-run profits and involves small-scale actions that serve a large purpose. Now, in the tactical decision-making process, we have the 6 steps. First, recognize and define the problem. Identify alternatives as possible solutions to the problem by eliminating any unfeasible alternatives. Identify the costs and benefits associated with each feasible alternative. Eliminate the costs and benefits that are not relevant to the decision. Compare the relevant costs and benefits for each alternative. Assess qualitative factors and select the alternative with the greatest overall benefit. So the alternative with the greatest overall benefit as comparing this. Now, the decision model set of procedures that, if followed, will lead to a decision. Steps 3 and 4 define tactical cost analysis. Use of relevant cost data to identify the alternative that provides the greatest benefit to the organization. Includes predicting cost, identifying relevant cost, and comparing relevant costs. So you refer to steps 3 and 4 in connection with the tactical cost analysis by identifying the costs and benefits and compare the relevant costs and benefits. Now, for the decision model, the tactical decision-making process involving the 6 steps with examples. First step, you have to define the problem. So, for example, what to do with small ill-shaped apples. So, that's your problem. Then, step 2, identify alternatives. Now, you are given 5 alternatives. And the first is sell to pig farmers. 2, sell bag apples. This is feasible. 3, make apple sauce. Again, is feasible. Number 4, make pie filling. And 5, continue dumping practice. Now, among the 5 alternatives, there are 2 which are feasible. So, you have to identify these 2 feasible alternatives. Then step 3, predict cost with the bag alternative. Actually, there are only 2 feasible alternatives. These are the ones from which you are going to choose the alternative to be used. Okay, so the first alternative is bag alternative. The revenue is 1.30 per bag, so it's 0.26 per pound. So assuming that you have how many pounds in one bag? If you divide 1.30 by 0.26, that will give you 5 pounds per bag. And B, the cost is 5 cents per pound. Then the second alternative is to use the ill-shaped apple in the production of apple sauce. So we have now the apple sauce alternative. Letter A, the revenue is 78 per can, 78 cents per can, and it's equivalent to 0.65 per pound. So in other words, one can has more than 1 pound. And B, the cost is 40 per pound. So we have now your step 3 in predicting cost. Step 4, you have to compare costs. So we have to compare costs related to bagged apples and production of apple sauce. We are going to use it on a uh, pound basis. So the revenue, if you have the bagged apples, is 26 cents per pound, and if you produce apple sauce, it's 65 cents per pound. The cost for bagged apples is 0.05, and for the apple sauce, it's 0.40. So the net benefit, if you are going to use the bagged apple alternative, is 0.21. If you use apple sauce, it's 0.25. Okay, so if you have now your bag differentiation and applesauce, it's now considered to be a forward integration. So in step 5, we have to assess qualitative factors. We have now your bagged apples using differentiation strategy and production of applesauce, a discomfort with industrial value chain, a no knowledge of distribution channels, potential need for expert, and potential unavailability of we have now your canning facility. Okay, so we have now assessed the qualitative factors. Then, step number 6, we have to select alternative. In selecting alternative, we have to select a bagging alternative because it's profitable and more consistent with strategic positioning desired by the producer. So in other words, one reason why you have to use the bagging alternative is because this time, no? Or the apple sauce. Because as stated, you have to select bagging alternative because it is profitable and is more consistent with strategic positioning desired by producer. Actually, the net benefit is 0.21. That's per pound. However, in one bag, you have 5 pounds. So in other words, if you have one bag, that will give you a higher profit. So assess qualitative factors, and at the same time, you have to select the alternative. Okay? So we have done steps 1 up to 6 in the case of the decision model. Now, relevant and irrelevant costs and revenues. Relevant costs and revenues are future costs or revenues that differ across alternatives. Irrelevant cost, if future cost is the same for more than one alternative, it has no effect on the decision. Sunk costs are past costs that are irrelevant, used as the basis for predicting future costs. Now, earlier, we have already discussed about a sunk cost, and it was mentioned that sunk cost is a previous or a past cost, which is no longer needed in making the present decision. In other words, it is irrelevant. Now, relevant costs and benefits in international trade, useful in decision making. Companies search for ways to reduce tariff. Tariff is tax on imports levied by the federal government and may restrict the amount of imported materials, alter the materials by adding U.S. resources, or utilize foreign trade zones. Okay, the foreign trade zones are areas that are physically on U.S. soil but considered to be outside U.S. commerce. No tariff is levied on items that leave the zone for non-U.S. destinations. Goods imported into FTZS are duty-free until they leave the zone. Benefits for manufacturers can postpone payment of duty and the associated loss of working capital. Do not pay duty on defective materials that have not been included in finished products. Now, the activity resource usage model focuses on the use of resources, and the categories are flexible and committed. The flexible resources are purchased in the amount needed and at the time of use. The committed are those acquired in advance of usage through implicit contracting. Now we have the resource, demand and supply, relationships and relevancy. Now we have the category of flexible. If supply is equal to demand and demand changes, now you have relevant data. But if demand is constant, it's no longer relevant. For committed category, supply minus demand is equal to the unused capacity. Once demand increases, so that's less than unused capacity, it's not relevant. But if demand increase is greater than unused capacity, then it's relevant. In letter C, we have demand decrease. It's a permanent item. So the activity capacity reduced is relevant. But if the activity capacity is unchanged, it's not relevant. Now, the applications of tactical decision-making concepts. Here we have the applications, and these four are very common. To make or buy component, to keep or drop a segment or product line, to accept or reject a special order at less than usual price, to process a joint product further, or sell it at the split off point. Now, in chapter 10 of Vanderbeck, we have already discussed relevant costing, and there are two among the four that we have really focused with, and these are to make or buy a component and to accept or reject a special order at less than the usual price. So the make or buy decisions, we have an example. The company produces 100,000 units of Part 34B used in one of its snowblower engines each year. So 100,000 units of the parts. An outside suppliers offered to supply the part for 4.75, and the unit cost is. Now, the unit cost, if you deal with production, so internal production is 4.85, including direct materials, direct labor, variable overhead, and fixed overhead of 1.05. Overhead is applied on the basis of machine hours. Part 34B requires 30,000 machine hours per year. What are the alternatives for the company? Assume that none of the fixed cost is avoidable. List the relevant costs of internal production and of external purchase. Which alternative is more cost effective and by how much? So we have now the make or buy decision for here. We have, if you make the parts, you will be spending 380,000. Now take note that we excluded fixed overhead. Though it's not avoidable, however, the fixed factory overhead was already charged to the regular production, while this one is your make or buy production. So if you only buy the parts, you'll pay 475,000. That's the 100,000 parts times 4.75. So for the difference equal to 95,000 in favor of making the part. Now, in other words, if you are going to make the parts, then that will involve a relevant cost of 380,000. But if you buy, you will be paying 475,000. So in other words, you have to involve the lower price and the difference of 95,000. Now, second is keep or drop decision. So it's either that you continue with this segment or drop. Dexter Company makes three types of GPS devices: the basic, the runners, and the chart plotter. The company is considering dropping the basic GPS line and keeping the runners GPS and chart plotter. So for this, take note that there are three types of products. So keep or drop decisions. The basic GPS, the runners, and the chart plotter. Now with sales totaling 3,100,000 and the variable cost of 1,297,600, we have the contribution margin of 1,802,400. That's your contribution margin. Deduct the direct fixed cost. So deduct the direct fixed cost. Okay, what are the direct fixed costs? Advertising, now deducted from the corresponding columns. Here for S, 124,000, and for C, for the amount of direct fixed cost. Individually, you have your advertising 85,000 for the basic GPS. For the runner, that's equal to 124,000, and chart plotter of 130,000. So the total advertising cost is 339,000. With the supervision of 60,000 for the blatter supervision, and 115,000 and 135,000 for the chart platters. So we have the total of the product margin equal to 1,153,400. But take note that your basic GPS, the product margin is negative. So it's a loss. While your common fixed cost, if you are going to deduct from the total, that will give an operating income equal to 238,400. Now that is your analysis if you have your keep or drop decisions with segmented income statement. Okay, so list the alternatives and costs for each alternative. So you have to correct each of this. List the relevant benefits and costs. Okay, so if we have the two, which alternative is more cost effective and by how much? What if dropping the basic GPS line would mean a 10% loss of volume for the runner GPS and device, and the 2% loss in volume for the chart plotter. Which alternative would be more cost effective and by how much? So keep or drop. So number one is make or buy. Then second, you have your uh, keep or drop. No, prior to keep or drop decision, you have make or buy. Then you have keep or drop with this example. And the product margin for the three products now is 1,153,400 minus the common fixed cost equal to 915,000. So that leaves the operating income of 238,400. Okay, so keep or drop decisions. Example, list the alternatives being considered. List the relevant benefits and costs for each alternative. Which alternative is more cost effective and by how much? What if dropping the basic GPS line would mean a 10% loss of volume for runners GPS and a 2% loss in volume for the chart plotter? Which alternative would be more cost effective and by how much? Two alternatives are to keep the basic GPS line or to drop it. It's the line which involves negative uh, margin. Relevant benefits and costs of keeping the basic GPS line includes sales, variable cost, advertising cost, and supervision cost. And all common fixed costs are relevant. None of the relevant benefits and costs of keeping the basic GPS line would occur under the drop alternative. Now we have two columns showing the keep alternative and the drop alternative, differential amount to keep. So for sales, less variable cost, the focus is contribution margin. That is in keep or drop. So contribution margin, and then we deduct the direct. Okay, we have the product margin negative. If you are going to continue the production and sale of here, meaning we have to keep no the basic GPS, then that will give you a product margin of 19,000. If you drop it, then it will give you 0. Then differential amount to keep is still equal to 119,000, and the amount to keep no or 19,000, that's the differential amount to keep. In other words, for the contribution margin of 126,000, and then we deduct 145,000, so there is 90,000. Now if you can consider this differential amount to keep of 19,000. Later on, you have to compare this with your other alternative. Now, we keep or drop decisions. Example, we have the sales, then the variable cost, and then we have the CM. We have all of this. Example here for the runner GPS. In other words, it will end up with a lower amount of net income because, as stated, volume of the runner GPS will reduce. That's if you are using the runner GPS. And you have now the sale of the plotter that will involve a negative, positive net income of 170 here. The contribution margin for the chart plotter is 1,047,600 32. So the total contribution margin of the two products is 1,594,232, considering that you are now trying to maintain the two products. So from the amounts as stated as contribution margin, we have to deduct the direct fixed cost. So we have now your direct fixed cost given, but we have the advertising, supervision, and product margin, which are still kept in connection. However, the effect of the sales revenue is on the runners and on the chart platter. The revenue was reduced if you are going to stop the production of the basic GPS. Now we have the operating income of 175,200. However, you have 915,000 for your basic, no? So we have the difference of 175,232. That's your operating income if you will drop the basic GPS. So difference in income is income with all three lines and income with only two lines. If you have three lines, including the basic GPS, you'll have this income. But if you have only here to maintain the two products, your income is 175,232. There is a difference of 63,168 because of the impact that dropping the basic GPS line has on the sales of the other two lines. The analysis shows that dropping the line will actually decrease income by 63,168. Therefore, the basic GPS should be kept. However, it would be a good idea to consider ways to make production more efficient. However, it would be a good idea to consider ways to make production more efficient. Now we have the third, it's special order. Example, the company, an ice cream company, is operating at 80% of its productive capacity, 10 million 1-quart units. An ice cream distributor from a different geographic region has offered to buy 2 million units of premium ice cream at 1.75 per unit, provided its own label can be attached to the product. Now, the normal selling price of the unit, no, is 2.50. Now, take note that you have now this special order for 10 million 1-quart units and with a selling price of only 1.75. So with this special order analysis, we have now the direct materials, considering that you are going to produce 10 million 1-quart units, and you have now the 2 million units of premium and at 1.75 per unit. However, the normal selling price is equal to 2.50 per unit. However, this time for a special order, it will only be sold at 1.75. So if you have to continue with the special order, we have the unit cost of direct materials at 1.95 for the direct materials cost, and the impact that dropping the basic GPS line has on the sales of the other two lines. Now, it's shown that if you are going to drop the line, then, or if you are going to reject the special order, or you have to accept, we have the variable cost of direct materials, direct labor, and we have packaging, commissions, and distribution. We have other variable costs. Then the non-unit level cost, including purchasing at 8 per purchase order, then receiving at 6 here. No, we have 6 times 80,000 receiving orders, and setting up is 8,000 times 50 setups. Now you have the problem here. Okay, an ice cream distributor from a different geographic region offering the 2 million units of premium ice cream at 175 per unit. Okay, so we have now your total cost of 14,800,000 at 1.85 for the unit cost. So the special order decision, the two alternatives are to accept or reject the special order. The relevant benefits and costs of accepting the order include revenue, direct materials, direct labor, packaging, other variable costs, purchasing, receiving, setting up, and the cost of the label template. No fixed cost will be affected. If the order is rejected, the net benefit is zero. So there is a 271,500 increase in operating income if the special order is accepted. So we have now the sales of, if you are going to accept, if you reject, it will be zero. Direct materials, direct labor, then we have the packaging, other variable costs, and you have your purchase orders with receiving at 20,000. Your receiving orders. Then we have the setting up of 104,000 plus the label template, so it will give a net benefit of 271,500 as compared to if you are going to reject. Now, decision, the last is decision to sell or process further. The company grows and sells fresh and canned food products. So the farm grows and harvests tomatoes. Each plot yields 1,500 pounds of income uh, of harvest tomatoes. Its plant yields 1,500 pounds of tomatoes, referred to as load of the 1,500 pounds. 1,000 are grade 1. We have grade A tomatoes, and 500 are grade B. The cost of growing and harvesting the tomatoes is 200 per load. So Del Rio can sell the 1,000 pounds of grade A tomatoes in a load to grocers for 40 cents per pound. Alternatively, the tomatoes could be processed into hot sauce. Each bottle of hot sauce requires or sells for 1.50 and requires 1 pound of tomatoes. So, what are now the... Oh, so we have now the cost of additional processing averages 1 per bottle. This amount includes the remaining ingredients bottles, labor, and needed processing activities. So that if you are going to sell the 1,000 pounds, that will cost 40 cents per pound. But if you are going to process this and produce into hot sauce, you have to sell it at 150, and that requires 1 pound of tomatoes. And we have now the cost of additional processing at $1 per bottle. This includes the remaining ingredients. So list the alternatives being considered. So the alternatives are you going to sell at the split off point, or you are going to process further? List the alternatives being considered, the relevant benefits and costs for each alternative, and which is more cost effective and by how much. So the two alternatives are to sell the grade A tomatoes at split off or process them further. Decisions to sell or process further. Relevant benefits and costs of selling at split off versus processing the tomatoes further. Include revenue from sale to grocers and revenue from selling the hot sauce, less the additional further processing cost. The $200 per load cost of growing and harvesting the tomatoes is sunk and need not be considered. Now you know what a sunk cost is. So we have now the decision to sell at split off point or to process further. If you sell at the split off point, you will have the selling price of 400. If you process further, that will be 1,500. So there is a price difference of 1,100. If you are going to involve further processing costs, to process further, you have to spend 1,000 more. And that's the cost difference. So, if you are going to sell a split of point, you have the total markup of 400. That's your profit. And if you process further, you'll have 500. So, meaning there is a profit difference of 100. Finally, relevant cost, ethics, and personal decision making. The decision maker should always keep the decisions within an ethical framework. Companies are hiring ethic officers and setting up hotlines for employees to register complaints or ask about the propriety of certain actions. Relevant costing analysis aids personal decision making. So that ends our lecture. Barely we have 35 minutes. So I have to upload this. Okay? So thank you and good night everyone. O convert na.